Okay, very good morning, Monday 18th of June. Let's just get the briefing underway because quite a few things to just be aware of for the week ahead. But starting off just with the charts this morning, the dollar index trading up marginally, about 0.2%, so we're a little lower in both major pairs, at least for the time being. Cable having made a bit of a break here below pivot, which was held very much through the Asia-Pac session, but when Europe and UK participants have come in, we just pushed down towards S1. Pretty similar case to the euro in terms of the S1 level, but traded below pivot in the overnight session. One thing to keep in mind overnight, that Chinese and I believe Hong Kong markets were closed, so liquidity a little bit different than normal, i.e. volumes a little bit lower, impeded by that market closure. But overall, a little bit of a kind of risk-off feel, but nothing I'd say that's frightening of any sense. It's more to do with probably a knock-on effect of Asia just reacting to a little bit of the market movement that saw a general negative turn to finish off the week last week. This being the trade war situation, that kind of $50 billion renewed tariffs put into force by the US, which realistically wouldn't come in till kind of end of the first week of July in theory, but that then sparking a fairly aggressive response from China that they would respond in kind with a similar amount, and then the US talking about, okay, we'll do another 100 billion if that were the case. So this kind of game of brinksmanship did spook the markets, and I think what was quite interesting about last week, and certainly if you're trading intraday, this is something that's always really important, and really this is the dominant theme of this briefing always on a Monday. It's about understanding and looking ahead for what's to come for the rest of the week is really key to identify where the key turns of sentiment might come. And last week, obviously, we had two really big interest rate decisions. You had the US Federal Reserve on Wednesday, and they actually managed to pull off a hawkish kind of move, i.e. hiking rates, but more importantly increasing their rate hike count to 4 from 3 for this year. But the markets managed to digest it in a way of which didn't get spooked by an increased speed of tightening, which obviously was a big focal point of the sell-off we saw in US equities back in February. And then we had the ECB, likewise, again managing to kind of state their conclusion of QE, but doing so in an incredibly dovish fashion, and we saw that biggest intraday drop in the euro, of course, last Thursday since Q2 of 2016. So what was key about last week, though, was all a build-up to these central bank decisions, and you had Wednesday, Thursday, Fed, ECB, and then, as we were talking about on Friday morning's briefing, you just got to be mindful of return back to trade war and those tariff policies, which was going to be probably the most influential for markets. And inherently it did become that once China, which was the risk, retaliated in the way that they did. So looking forward to this week, I want to kind of kick the briefing off with just having a look. Let's see if I can make this a bit bigger. This is kind of a summary of the main events from this week. You might as well scratch off England versus Tunisia and Panama. If England don't thrash both those teams, then there's no hope for us at all. But having a look here, and Monday, it's pretty quiet. I did send out the daily economic calendar as well. You would have probably already seen that. But there are a couple of speakers, and this is quite normal. Now that the Fed kind of come out of that blackout period post the announcement, you start to get a whole flurry of Fed speakers. But I would say there's not a great deal that I'm looking for. I mean, they've really laid out a pretty clear line of what they're looking for in the months to come, and I believe an interest rate hike now is very much, if not towards getting to the same level of what June was, but we're pretty much odds-on priced in for a rate hike in September. So the logical sequence then would be a SEP-DEC hike from the Fed to execute their 4, coinciding with the projections that will come out. Remember, the meeting-to-meeting press conference with Jerome Powell, that's not going to start until the beginning of next year. The other thing, though, that's probably not on your standard economic calendars is actually the EU bill returns to the House of Lords for consideration of Commons amendments. As far as I'm aware, the TV coverage of this on Parliament TV begins at 3 p.m, so it's going to be a bit of a repeat of what we had in the prior week. It's kind of late afternoon London time when you start to get the votes on those amendments. This is kind of the way that UK Parliament works. The Commons set the policy, if you like. It then gets heard by the upper house, the Lords. They then have the right to amend. It then goes back to the Commons, who can agree or disagree. They then send a revised copy back to the Lords. This is actually, there is an actual term that it's called, is ping pong, and I'm not making that up. That's actually the term of which Parliament calls this, and then there is a definitive process that this goes through. So this is where we're at the moment. Is this going to move the market a great deal? I think it's just something to certainly be aware of if you're trading the pound late afternoon. Would it be something I think though I would wait for the rest of the session? Maybe not in that essence. Looking further forward into the week, you do have quite a few things. On Tuesday, speakers, again, quite dominant, economic data quite quiet. One thing that you do have is Merkel and Macron meeting on a final EU reform proposal. It's almost as if that's been put on the back burner for a while, just because of the backstep Merkel took in the German elections. And on the topic of Merkel, let me just bring into shot this story here. I mean, this is sensationalism at its best, I'd say, on behalf of Bloomberg this morning. Angela Merkel's political future is at risk. Technically, that is correct. And certainly, if you wanted to just raise a few eyebrows, why not just run a headline like that? But I think that this is, making a bit of a mountain out of a molehill at this point. You'll remember, though, at the end of last week, we saw some extreme short-term volatility on kind of almost a fraudulent tweet that got sent and then got denied pretty quickly, that saw a dramatic sell-off and recovery in the euro in the space of just a couple of minutes. Long story short, what this is about is that at the moment, the government with Merkel is run with a sister party, Merkel being the CDU, and it's the CSU that's causing some issues. It's a chap called Horst Seehofer who is looking for some updates in policy in regards to immigration that's been the sticking point. So this needing to be resolved ahead of the 28th, 29th EU summit is what they're hoping for. But this takes a bit of a sideline today because she meets with Macron, but this is something I guess that just needs some monitoring because it is a kind of a situation that's growing with some interest across market participants. But is this headline causing the euro to sell off this morning? Well, no, it's not, but it's something to just be aware of. So back to that calendar of events. So Wednesday, again, quite a lot of, if you check out the roster for the speakers on Wednesday in the centre there, you've got Bank of Japan's Kuroda, you've got RBA's Lowe, Fed's Powell, ECB's Draghi. So you've pretty much got all the main heads of their respective central banks speaking. And then what's interesting here, you'll note, you have Vienna Oil Conference Day 1, happens on Wednesday. And if you scroll down, then you've got Day 2, happens on Thursday. Then you have the OPEC official ministers meeting on Friday, and then OPEC non-OPEC meeting, so obviously with Russia and Mexico and so on, that happens on Saturday. So for the OPEC related commentary, it's really going to ramp up, I would suggest, because, and it's going to happen, I'd say, relatively soon, because you've got those oil conferences happening from Wednesday. So Wednesday, Thursday, OPEC meeting Friday, OPEC non-OPEC Saturday. Now, what's the current state of play with this? So this is probably the comments that you would have seen over the weekend. What's happened here at the weekend is that not only have we moved now the needle to not just a supply increase of 1 million, but to 1.5 million, which is the number touted last week. So that's kind of the baseline expectation, because it's the most influential of countries looking at that number, i.e. Saudi and Russia. But over the weekend, Iran said Venezuela and Iraq will join them in blocking the proposal to increase production that's backed by Saudi and Russia when OPEC meet in Vienna this week. So already you're getting this very fractured breakdown in relationship, and it's nearly always kind of chiefly led by Iran and Saudi being the most difficult of relationships to come to some kind of compromise, and that's seemingly happened again. Now, why is this important? Well, if you think about it, think of your OPEC members by size of production. Iraq is number 2 and Iran is number 3. So between them, roughly, you're talking about the best part of, say, 8 million barrels per day of crude oil production. Now, Saudi are pumping 10, pretty much 10 flat. So without these guys being on board, it can be a little bit complicated on how exactly you're going to, either increase supply, keep it unchanged, or keep these cuts going without these guys being on board. So I'd say there's still a little room for maneuver with the conversations as they evolve and we go through the week. For those who've been in the market long enough, but probably more for the newer guys, the outcome usually of the OPEC meeting way before the meeting in itself. And given the fact that that oil conference is happening in Vienna, the location of the OPEC official meeting the 2 days prior, you're going to be pretty well informed. So just be mindful of some large bouts of volatility in oil as we progress through the week. Looking at oil, obviously it's seen a substantial repricing. A lot of people scratching their heads about some of the commodity moves on Friday. But for me, this was all a byproduct of the trade talk. The trade talk escalation, if it comes to a point where they're calling their bluff and no one backs down, and really this is US and China, this is destabilizing at least for markets' outlook about global demand for commodities on the fear of a global economic slowdown if we did go into tit for tat on the tariff front. And so it wasn't just oil. Obviously, gold got slammed at one point. Silver followed, copper, some of the soft soybeans all followed suit. So again, technical breaches of key levels, momentum, helping trigger probably some algorithmic systems to hit the sell button as well going into the weekend, but all kind of amid a sentiment of growing negativity on a trade war front. Looking where oil trades at the moment then, this was the Friday move, and obviously it was a pretty big pullback. We went from 67 all the way down through to 65. Looking at where we've traded this morning, in Asia it's been a continuation. Not forgetting as well that you've had generally some lighter volumes overnight. Although we're looking at WTI crude future here, it's generally quite quiet in Asia trade, but even more so when China and Hong Kong are out of the market. So we're down $1 already. We're trading a 63 handle. Looking at the longer picture here, there's obviously quite significant levels that have been tested. If I just bring this into shot. So where we are at the moment, and we've just below there, is quite a key level, I'd say technically. I guess this is about asking ourselves, well, how much of this pull-off that we've seen from the high point at 72.80 has now been priced in? That's the question. You've got some levels maybe on a pullback that could be quite interesting should they not go ahead with the cut, but I'd say odds are on that that is going to happen, because irrespective of whether Iraq and Venezuela and so on will try to contest it, at the end of the day what Saudi and Russia want, Saudi and Russia get. So we've managed to break below there at the moment. Near-term levels on the downside, targets maybe at 63.28, but then probably more stronger would be 61.81, then that kind of range low, then getting further down, just scaling it down is what I'd be doing. Looking at these key levels as we continue to move south. But one must remember, we were trading a 73 mark almost, and we are now about $10 away from where we were trading only really about a month ago. So at what point does this supply increase become priced in? I would say that bigger drop was this talk about 1 million. That's obviously stepped up now to 1.5. Throw in a trade war as well to boot, and hence you've had a second kind of phase of fairly aggressive selling. I'd be interested to think that, well, maybe we might get a bit of consolidation around this area here, 61 kind of 80 to the 63.28 mark until the actual meeting hits. Where we go from there likely be derived from the outcome of the meeting in itself. So yeah, oil, big week. plenty to look out for. And again, not just an OPEC story, trade updates, if they do heat up, can have a meaningful impact as well. So something to be aware of. Going back to our weekly calendar again. You'll notice you've got the SNB on Thursday and the Bank of England interest rate decisions. So it's really the Bank of England one that we're normally much more in tune with rather than looking at the Swissy. And with the Bank of England, I think one of the things that you get when you're trying to prioritise how important these events are, if you read the weekend press, whether that be Bloomberg, Reuters, the FT, who's talking about the Bank of England interest rate decision? Pretty much no one, because no one really cares, to be honest. It's not this month that we're looking at anything particularly interesting happening from the Bank of England, but nonetheless that will be coming out on Thursday, midday as per usual. You do also have the Eurogroup meeting on Greece. Not sure if you saw that at the weekend. Tsipras survived a vote of no confidence. I think it was something like in the 150s against the 120s for him to remain. So for now, he lives to fight another day. But this meeting on the Eurogroup is to do with Greece's financial assistance. So this is much lower, I would say, down the hierarchy of key influencing events for this week. But certainly if there's a regular pattern of how these things play out, well then Greece's creditors, i.e. Europe, ECB, various other European countries, kind of play hardball, get Greece to commit to quite far-reaching austerity in order to facilitate renewed payments of finance. Greece push back, they say no, they get to the 11th hour and then they agree a deal. I don't really see this going anything other than just a regular routine in that sense. The other key speaker event for the week is you've got South Korean president meeting with Russian President Putin. That's a 3-day meeting, in fact. That also starts on Thursday, runs through to Saturday. So, Putin certainly getting in his one-to-one FaceTime at the moment with various major powers. So it could be something as well, just to be aware of. And then on Friday, you do actually have some important economic data, because these are the first readings of the manufacturing service PMIs across the major countries, so Germany, the EU and the US. And as I said, you've got that OPEC meeting, and then the actual Russian-Saudi sign-off, that's likely not to come to the weekend. So yeah, busy week, and I hope that a week like this, certainly from an intraday trader's point of view, it means that, yeah, it could be exciting. There's a lot certainly on the docket. I'd say for me, the main things to be aware of here is I actually think economic data right now, given the closeness of the ECB and Fed communication, given the Bank of England's largely a non-event, actually it's more speaker events rather than economic data which carries the most interest this week. So as we go through from the Brexit side of things, looking out for the House of Lords amendments that we saw from the Commons from last week. What do they have to say about that? You've got Merkel-Macron meeting, but I think that's more to have a look at if anything materialises just further with any political discord between the CDU and CSU parties in Germany. You've got a whole batch of key central bank heads speaking on Wednesday. You've got the PMI data on Friday, and then obviously the OPEC talk throughout the week. But if you were looking for a one-off event which could then put all of this in the background, that's still the trade situation. It's still the trade wars. Now, we've had a fairly quiet weekend on that front. There's been nothing really monumental that's new that's occurred. And so markets, I'd say, although we've opened with a slight negative tone, you've got equity futures slightly negative, oil's down $1, gold's up 4, T-notes up 5. So this is moderate risk off mode. But this week could pivot either very positive or negative depending on the trade situation. So I still give that probably the highest ranking, even irrespective of the fact that there is no scheduled part of the actual release that we're looking for. Okay, a few other things just to round off the news front that you may have seen. Theresa May is concerned by Brexit enemies. Hardline Brexiteers may be closer to a leadership challenge. I don't know. I think that that's, again, technically a right statement to make, but Theresa May has been under a leadership challenge pretty much since day one, and it hasn't really progressed. More likely probably due to the fact that there's no one else credible that would take her place. But looking at a couple of the news stories you might have read at the weekend, this was certainly one of them. On Sunday, she was talking about a Brexit dividend. I don't know if you guys caught that. Theresa May, though, in the FT, it's been commented that faces a backlash from inside her own party over her promise of an extra £20 billion for the NHS, as MPs rejected the notion that a Brexit dividend would fund much of the windfall, and warned of politically unpopular tax rises. It's because, let me just explain this. Obviously, the NHS, this is a really big deal. You'll remember the famous bus with Bojo and his 350 million a week that could have been going the way of the NHS and so on. But this is quite a sensitive subject from an internal political situation, I'd say, in terms of its reflection on the populace's view of the government's management of Brexit. And the question then is, well, how do you finance this 20 billion? And so tax rises is something of which you would probably put in a more black and white way, something that the Labour Party would be more intent on doing, i.e. taxing those of a higher salary bracket in order to pay then for these other types of programs. So coming from a Conservative government, this would be incredibly unpopular in that sense. But I did see this really interesting analysis here from a chap who, Paul Johnson. He's basically the head director, he's the managing director of the Institute of Fiscal Studies. And he made some pretty interesting points. He was talking about the extra 20 billion means higher borrowing or higher taxes. So either way, it's a lose-lose. You either borrow more, but the Tories obviously have a mandate about fiscal discipline, or you higher taxes, which goes against kind of the normal, regular Conservative stance. Not only that, Theresa May was talking about this 20 billion coming as a Brexit dividend of money that they would have in the longer run to then spend on the economy. But he makes two interesting points and backs this up with quite solid data, saying the government has accepted Brexit will weaken public finances. And then two, the financial settlement with the EU, i.e. that multi-billion dollar fee or billion euro fee, plus commitments to replace EU funding, already uses up all of the EU contributions in 2020. So there actually is no Brexit dividend. But yeah, Theresa May getting a bit of heat this morning on the back of these numbers. She's seemingly just kind of this new plan she's come up with, which has come under scrutiny pretty quickly this morning. Looking at cable, is this really moving cable? I don't think so. I think this Brexit talk is just ongoing. If I'm looking at it, I mean, Eurodollar and cable are both a bit lower. Cable may be underperforming slightly, but one thing to be aware of is that concerns about the health of the British economy continue to be quite a key theme. This came out from the British Chambers of Commerce overnight. Britain's economy looks on track to grow at its weakest rate since 2009. Brexit uncertainties, higher oil prices, fears of a trade war are all things that are going to have an impact on the performance of the UK economy. So yeah, looking at the pound this morning, coming down to its S1 level, you've got the initial kind of flash low that we printed very early on the Friday morning. I'm just looking at cable here on a slightly longer time frame. Once my chart updates in a second. We'll just give it a few seconds for it to come to life. But yeah, these are what I'd be doing is not taking too much into the Brexit commentary, but looking more into the fact that technical levels on the downside, picking out some relevant ones for the week if we were to remain heavy in that sense. Okay, the chart not coming up, so let me see if I can just bring it up on this one. Yeah, so you can see the importance of that test that we had. This is a daily continuation chart. So that double bottom from the end of May, right here, and where we were, that was Friday's session, so far has held, but another more pressure on that point could certainly be interesting. And then on the downside, that's quite a nice level there, I'd say, to keep an eye on as its potential target. You've kind of got that low points that were seen throughout the best part of really a 2-month period, and coupled that then with the kind of pre-summer highs that we had in 17. It did break through that through July, August, but yeah, quite a key level down at 130.53 on the slightly longer run to be aware of. On the upside, any meaningful bounce, then we've had such a sharp sell-off over the course of the last few weeks since we hit that initial kind of double top up at around that 144 handle. I guess the one thing to factor in would be potentially the Bank of England commentary, and we do have the meeting, although it's largely a non-event. How much of an uncertainty is Brexit becoming, and also their thoughts on inflation, having seen it now stabilise but drop quite rapidly, but still prospects of the UK economy growing ever more negative. If the Bank of England sound dovish, then certainly that helps to open up some more potential downside. Final news stories, just to finish things off, just in case you get the headlines and you're wondering, well, why has this happened? You might see a lot of US bank commentary during the US as the North American sessions as we go through the week. That's because actually this is the first part of regulators preparing to release their first round of stress test results this week. This is part of their annual stress tests, and large US banks are poised to hand over more capital investors than they were generating from their businesses for the first time since the 2008 financial crisis. Now, this sounds impressive. US banks poised for $170 billion in shareholder payouts. However, this has been a fairly consistent theme. This number has been growing. The payout and dividends has been getting ever larger as these banks generally have been getting more healthier in terms of their performance, and their capital buffers are now kind of appropriately in place. I would not be really expecting too much uncertainty to come out of the stress tests. If anything, it could add a layer of positivity that the banking sector is still in a solid state with ample amounts of kind of backstop buffers, if you like, from a capital perspective, should things take a negative turn on the trade front at least. All right, so just quickly to round things off for today, there is very little to nothing on the economic data slate. Therefore, probably be looking for general sentiment to be derived from anything new on the trade front. Watch out for Donald. If he's back in the States, he likes to start tweeting bedside from around 11:30, 11:45 our time. And his tweets come thick and fast earlier rather than later in that sense from a timing point of view. Otherwise, speakers, a couple of Fed ones to be aware of, with ECB's Draghi finishing up the kind of European session. So Dudley at 1:45 and Draghi at 5:30. And as I said, that House of Lords hearing on those House of Commons amendments from last week, that's due to commence in Parliament from later on, from about 3 o'clock onwards for any sterling traders. All right, that's it. Going to leave it at that. So wish you all a good day and a good week ahead. Me and Piers will be interchanging on the desk for any of the stage 3s, or the guys at home in stage 4. You can speak to either one of us, whoever you basically see on camera. We'll be happy to help. All right, guys, have a good day and a good week. Thanks.